Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Okay, quick check-up on what's happening. It was a good morning, but then things kind of evened out a little bit. That's how it's been right from around 11 o'clock onwards. And if you take a look at the different constituents right now, the Nifty Bank is still outperforming the Nifty to an extent, but otherwise things have cooled off a little bit. So where has the cool-off come in from? Well, a couple of stocks from the auto pack, Eicher Motors, M&M. These are names that have been fairly subdued. Even Maruti, for that matter, is down about 0.6%. On the upside, as we just told you in the headline, stocks that are moving on either brokerage upgrades like Axis or Sun Pharma, they're doing well. In fact, Pharma as a pack is standing pretty all right. Reddy's and Aurobindo also holding on to gains. So I guess, Nisha, taking it a little easy, and obviously in mid-caps, it's very, very stock-specific action. OMCs, for instance, they've lost a lot of the morning euphoria as well.
Oh, that's right, Surbi. In fact, in the last few minutes only, Nifty 50 has given up and, in fact, turned negative. So that's one thing to watch out for at lunchtime. Clearly, Nifty 50 in a slumber mode. But let's also take a look at the global action. Most Asian markets, they ended moderately lower after the release of softer than expected Chinese data. In fact, Chinese retail sales, industrial production and fixed asset investment all slowed last month as efforts to rein in credit expansion and also reduce excess capacity in the world's second largest economy hit home. Now, all eyes are now going to be on US inflation data this evening, and that may offer some clues for Fed's monetary policy direction as well, depending on the inflation dynamics. Let's take a look at the European markets as well, and they have also opened lower as investors look ahead to the Bank of England's latest policy decision and how it plans to navigate the higher inflation and the ongoing impact of Brexit on the economy. So it's red on the screen on the European markets, and that's also weighing a little bit on our Indian markets as well. Nifty 50, the others from flat to negative at this point. Now, investment guru Marc Faber and the author of Gloom, Boom and Doom report is optimistic on the markets, and he remains positive on emerging markets. Take a look.
I've been very positive about emerging markets for about a year relative to the US, because after 2014, emerging markets grossly underperformed the S&P 500. If you look at the major markets here in Asia, India and China. India is up close to 30% in dollar terms, and China hasn't gone up a lot. So I think that some money will be taken off the table in India and move into China. And the sentiment about China was very negative 6 months ago, a year ago, and now it's turning more positive.
Okay, so sentiment's turning positive towards China. That's the word from Marc Faber. Let's look at some domestic macro cues that came through a while back. Wholesale price index inflation has quickened to 3.24% in August from 1.8% in the previous month. Lata is here to help us understand exactly what this is going to mean for rates and for of course, overall the economic trends as well. Lata, so we were expecting an acceleration much like CPI, but does this number worry you even more?
But the fact that CPI was already announced makes this number less important. Also, this is not the number followed by the Reserve Bank. It is CPI. To that extent, the market won't palpitate so much about these numbers. Not all price increases are bad. If we are coming out of deflation, then some of the price increases are good for manufacturing products. But where you would worry is vegetable prices. Food as a whole has risen by about 2% month on month and almost 6%, 5.75% year on year. The biggest culprits are vegetables. That's largely tomatoes and onions. Tomatoes led to a vegetable price increase month on month of about 8%, and onions have increased like 88%. So actually a 10 rupee vegetable per kilo became something like 40 rupees. That's the kind of gain that onions saw. The fuel index, WPI is divided into three primary articles, fuel and manufacturing. Fuel also went up because, as we all know, and we've all been shouting about it, petrol and diesel price and kerosene prices went up. So petrol itself accounted for a 3% increase. So that index has gone up, and manufactured products thankfully have gone up because they suffered a long period, almost 24 months of either deflation of flat prices. In that, the outsized contribution have come from metals and steel. Both of them have risen both month-on-month and year-on-year. The month-on-month, the year-on-year increase in basic metals is 11.4%, and you've already seen it in the stock prices of Vedanta and Hindalco. Likewise, steel, that's up about 4% year-on-year and up month-on-month as well. Again, that's reflected in most of the steel stocks. Wearing apparels have increased, paper has increased, a little bit of chemical prices have increased. So generally a good month for industry, and not very bad at a macro level because it's up only 2.85% or thereabouts. So that's the level of inflation you can take. But if you're expecting a rate cut from the Reserve Bank, this is not what the doctor ordered.